Dekota Oechsle here with Remax Southern in Griffin, Georgia. And today we're going to be talking with my good buddy Brandon Respress with Nexa Mortgage on the benefits and steps to get pre-approved for a mortgage. So Brandon, introduce yourself real quick.
I'm Brandon Respress. I'm a loan originator with Nexa. It's a joint honor to get to share some time with you guys and help you make decisions on process and to get into your next home. Because when you're making the decision, it seems like a huge mission. But with professionals here to help you, we're here to make sure that it's a great experience for you so that you can just think about what house you want. So Dekota, I have a question for you as a loan originator. What is the difference for you when a client comes to you having already talked to a lender, then they have the pre-approval letter?
Pre-approval letter is a big deal for me as a realtor because that means that I have a buyer that is serious and they are ready to hit the ground running. And if you come to me with a pre-approval letter, that means we don't have to go through any of the pre-approval steps because you've already done it.
Okay.
And with that, you know what your budget is, you know what you're qualified for. We got to go find you a house. Yeah. So Brandon, let's just jump right into it, man. What information and documents is the buyer need to provide to you to get a pre-approval letter?
So from different lender to lender, there are differences, right? But for me personally, we will need to complete 1003, which is a mortgage application. And then we'll need supporting documentations for any statements you make in that application. So if you say you're employed and you're depending on employment income, I'll need those tax returns or W-2 to verify what you say. Same thing if you say you have a certain amount of dollars in savings, or if you're planning to sell your existing home as the down payment for your next one, I'll need documents that verify you own the home or that you actually have the funds in savings. The other thing we'll need is something to verify your identity, right? Typically that's government provided identification. And then we'll need a credit pull. And so that credit pull will fill in the section of the application called your liabilities. And so all of those documents together, your application plus the supporting documents for that application, create kind of a complete picture where we can say, yeah, this person meets the qualifications to have access to a product. And that's what we're basically trying to do, is pair you with a lending product if you need a lending product. And then if you're a cash buyer, you can just call Dekota here and buy a house, right? If you're a cash buyer, it's much easier. You don't have to jump through the hoops because you're using your resources. But if you need a mortgage, it's always about pairing you with the right product to win the deal in a way that works for you as a client and works for your life.
Brandon, let's just briefly discuss what a pre-qualification is versus a pre-approval, and what a pre-approval is and why it's so important to have that in the home buying process.
So all this different language from lenders that makes things very interesting, right? But a pre-qualification, and I explained this in a video where a pre-qualification is us generally discussing options, but we aren't really digging into what your application and borrower profile is, right? With a pre-approval, we have clearly defined you as a borrower profile. We've collected your application, we've collected the documents, we've collected your credit score, and so we know who you are as a borrower, and so you can use that pre-approval letter to get a home. A pre-qualification is more just a consultation. You call me, hey, I'm interested in buying a home, but I'm not quite sure if I'm ready. Can you answer my questions? To me, that's a pre-qualification. I answer your questions. I let you, hey, this is where you are based on what you've stated, but we haven't really done anything to verify those statements. And for me, a pre-qualification lets a borrower, it helps a borrower plan, but a pre-approval helps a borrower act.
Good way to put it. Good way to put it. So how long does the pre-approval process take, and how long is a pre-approval letter good for?
The pre-approval process could be as quick as 30 minutes. If you know you're serious about buying a home, I would say go ahead and collect all the documents. And I have them listed on my website. I'm sure they have them on their website. Go ahead and collect all the documents, even if you don't know that you're going to need them. I have a list. I always tell people just get the documents just in case. Collect all the documents you'll need to get pre-approved. Be ready to do a credit pull, and then be ready to spend 30 minutes doing an application. And you can do the application from your home. If you want to do it from the comfort of your home, I can text you the link. You can do it on your own while you're watching the Falcons win a game or whoever your team is. But it's 30 minutes, but it really depends on you as the client. It could take 3 or 4 days because it takes you a longer time to get documents, but it could be quick. It's not that long to get pre-approved.
And one point I want to talk about here, Brandon, because I learned this the hard way with the deal that you and I tried to put together, is the credit reports. Make sure your credit is unlocked or unfroze.
True.
before you do the credit pull, because what happened when I tried to do it, Brandon?
Yeah, it was frozen.
All my stuff was frozen.
Yeah.
So we had to do it again, didn't we?
And I will add, it's smart to keep your stuff frozen when you're not pulling, right? Because it's just a security blanket, right? And make sure that nobody can steal your identity. But when you are ready to pull the credit, just call the 3 credit bureaus, do the steps you need to get it unfrozen for that day, because we really don't need it frozen beyond that point. Get it unfrozen for that day, and then do your mortgage application. The other thing I'll say about the credit pull is if you have a co-borrower, make sure when I send the link out to my applicants to do the credit pull, make sure that if you're individual, that you're doing that individual pull. And when you do a joint pull, do a joint pull. It costs the same thing, but we want to make sure that we're pulling from 2 borrowers if there are 2 borrowers. So those little credit pull tips. But yeah, it's a quick process to get pre-approved as long as you're ready to go.
So once you get the pre-approval letter, Brandon, how long is it good for?
Totally forgot that. So a pre-approval letter typically will last anywhere between 30 and 60 days from lender, because your documents only last for that long. So say we need 2 months of your most recent pay stubs. After 30 days, you need new pay stubs, right? After 60 days, if a lender's more generous, you need 2 months worth of pay stubs to get the file moving forward. Likewise, if you have a situation or bank statements where you're dependent on bank statements, any of those things are time sensitive. And then a credit report only lasts 120 days. If you don't buy in that 120 days after you do your credit pull, be ready to have to do another credit pull in 120 days. So all these actions are time sensitive. And a lot of lenders will write a pre-approval for 30 days because they know they need updated statements. Some lenders will do 60 days and just ask you for the documents again before they submit the loan to the actual lender you're going through, or if you're at a bank, they're submitting to themselves. But typically 30 to 60 days is the norm.
So Brandon, if a buyer is self-employed, how do they go about getting a pre-approval letter?
So the pre-approval process for a self-employed borrower is quite similar to someone who is W-2 employed by an employer. The only difference is how you verify statements might be different based on how you file your taxes, right? So if you're very aggressive on deductions, or if your Schedule C's, you take advantage of those deductions you've earned as a business owner, we might have to use other sources to qualify what your income is, right? We might have to use your asset statements. We might have to use bank statements, or the best option, a CPA letter. If you have a CPA or accountant that could verify what your income is, those might be better than using your tax returns as the verification of income. So there's just something that's different.
So you can still get someone that's self-employed approved. It just might be a few more steps, a little more paperwork to get.
You might have to submit 12 months of bank statements or business statements or 24 months.
So it's going to be individual specific.
100%.
So if you're self-employed, don't be scared from buying a house. Brandon can get you approved. Just have your paperwork in order.
Yep. Any good mortgage loan originator is going to be able to do those things. And if you want to reach out to me, I'm here.
We've got a pre-approval letter in hand.
Yep.
What is the benefits for a buyer in their home search of having a pre-approval letter in regards to what they can afford in their budget?
I will pre-approve you for the max amount that you can borrow. I would never advise that someone buy a house based on that maximum pre-approval. I think a safe budget, and most experts will find anywhere between 25 and 35% of your monthly income going towards your mortgage payment, it's a safe place to be. But I'll pre-approve you on your max. And then what'll happen is, as you're making offers on your home, I'll typically get you a pre-approval letter based on what you actually want to purchase the home for. You never want to present your max pre-approval.
That's right.
You don't want the seller to know, right? But you do want a pre-approval that makes it very easy for you to negotiate. And so we'll let you know your max, and then we'll send you a letter based on what you actually want to offer based on your budget and your priorities.
When we're looking for homes, and say, Brandon, we're looking at a house that's 300,000. My buyer or our buyer is approved to 400. We're not going to tip our hand, hey, Mr. Seller, we're approved to 400,000, but we only want to offer you 278 for your $300,000 house, because we can have some negotiating room. We will shoot ourselves in the foot if we show that we got a $400,000 approval.
Agreed.
So how fast can you get a letter turned around if we want to put an offer in? And this is what we're offering. How fast could you get me a letter?
It's as quick as when Dekota texts me and I see the text message, I can go into the system, change a number, and click print, and you will get a PDF. Dekota will get a PDF. It's really that quick. And you can make an offer with that new pre-approval.
And then the fun starts because we're negotiating.
Yeah. And they do all the negotiating. I negotiate with the lenders. I find the best price I can find in the market with the lenders, right? Or the best credit. Say you need some cash on your side to help you close. I find that lender credit that's going to bring some money to you for taking that interest rate. And so that's where I do the negotiating. Dekota here does the negotiating with the seller of the home to make sure that we're using your dollars responsibly.
That's right. Getting you the best deal we can while also getting you the house that you want.
Yeah.
Awesome, man.
Dekota, I have a question for you.
All right.
With all the source of information about median home prices, and I know there's a lot of anxiety about buying a house right now, where would you say is a great source for a client who's looking to buy in a specific place?
I would say, honestly, call a realtor because we know our market. If you're good, and my core area is Griffin, Spalding County, and surrounding areas.
Right.
That's where my home base is. I can go the entire state of Georgia, and I can look up stuff online all day long, but I know my market, I know my neighborhood. So if you're wanting to know what the real numbers are in the area that you're interested in,
Right.
call a realtor, say, hey, how's the market doing? I'm looking at this area.
Yeah.
What can I get for X dollar amount? If your realtor cannot spit off a home in that price range or give you an idea just off the top of their head, they don't know their market.
And so I'll add to that. In the mortgage field, if you Google the average interest rate, if you just Google it, what is the average mortgage rate right now? Google will tell you it's around 7.3, 7.3, 7.25. That's today, 10th of October. Google will tell you it's in the sevens. I haven't locked a 7 since 2023. That's really high for my clients, unless it's an investor client. But for a primary residence, a 7 is very high, right? If you want to be empowered as a home buyer, reach out to your local realtors, reach out to your local lenders, and have a serious conversation. This is where things are. This is where you are. And let's make a plan based on those things.
And Brandon, this is a shameless plug.
Yeah.
Because I know you do the same thing. But I do a market update almost monthly for Spalding, Pike County, and some surrounding counties as well. And I've seen your social media. I know you give some updates too.
I do give, whenever something big happens, updates.
All right, Brandon. So we're going through the pre-approval. We have a pre-approval in hand.
Yeah.
What are some things that a buyer should not do while we're searching for homes?
I like to tell borrowers, when you apply, you're creating a picture for underwriters. Okay. You should make sure that the picture you created is consistent, because they're approving you based on the picture you applied with, based on your documents and everything. So if you change something dramatically, it creates a question for underwriters. So if you have a big lump sum of money come into your savings account after you've applied, and you have to submit bank statements, they're going to wonder where that big sum of money came from. If your credit card balances increase, it could affect your approval. It could affect your conditions. It might mean that you have to bring more money to closing to get back to the debt level you had when you applied. So don't run up those credit cards. Don't buy a new car. All right, that's the worst thing you can do. A car is your enemy. Be consistent.
What if I want to take the wife out for a really expensive vacation in anticipation for us closing on a house?
I would advise against it, unless you are. I would advise against. There's no unless there. I would advise against it.
Would you say you can celebrate after closing?
I would celebrate after closing. I would be as consistent a picture. Again, consistency is the key. I would be whoever you are when you got approved, because first you get pre-approved, and then when you go under contract, you get approved. Even when you get approved by the lender with condition, you want to be consistent, and you only want to do what the lender tells you, because in those conditions, the lender will tell you what it takes to get to closing. So all you want to do is do what they tell you. Anything else in life you want to keep simple. Buy your groceries, go to work, keep the same job, be the same person until you buy your house. And then when you buy your house, it's your business what you do. It's your business. But until you get the keys, be who you were when you applied, or be whoever the underwriter tells you to be to get to closing.
So be boring until we're at the closing table and I hand you the sign that says closed with Dekota.
Yes.
And then you can be as excited as you want to be.
Yes.